Many people are looking at the energy prices currently. The main worries are for the industry, can we still produce at the same price level? And the other question is, are we able to heat? Are we able to drive or use any kind of fossil energy in the near future? Is the price going up or is it down? Are we at the turning point? Let's have a closer look and we will see. Yeah, indeed, it's a main issue currently. What is the energy price doing depending on where you're living? In Europe, for example, it's a tough issue. In America, maybe because of the strong US dollar, the chances are high that you are not suffering so much as other parts of the world currently. However, what is the price movement doing? What is it telling us? I want to show you what the charts are telling us, and I don't want to bring you into the idea I have to buy or I have to sell now, but I want to give you a clue what we as institutional traders are looking at when seeing the price levels. Why looking at the price levels at all? Isn't it the political situation currently driving the prices, or isn't it the Fed, for example? Isn't it the currencies which are driving the prices depending on what area in the world you are living? Yeah, maybe the news are driving the prices. However, it is still a person behind that, is still a community of traders and or investors in the need to do something. And they are having a closer look at the charts, some of them at least. Others don't. However, the price movement, what they are doing, is really important for us traders for our decision making. So what we do is having a closer look what they are doing, how do they react on the price movements, and what we can deduct from this. So let's start with crude oil. And crude oil came down, let's say strongly. Yeah, if you see it like that. Since June, we had a down movement coming back roughly here. Crude oil future, don't worry about this labeling here, the symbol, that's the future. This is what the normal energy interested people are looking at when they are checking the prices of crude oil. And you can see that we were coming down to the October 21 highs and some other quite interesting levels here from Fibonacci. It is the 38.2 Fibonacci level, for example. Additionally, this size of the first part here is, let's try it again. Yeah, this one and this one is more or less the same size. And these are indications that the market has some kind of support there. And if you have a closer look, currently the market is still sticking at these levels here. So you can see we came down, we had this typical price pattern in a counter movement. After it is some kind of a pause. The market is taking a breather here after the strong movements from literally zero and coming up. And this is the typical pause and this typical size of a corrective pattern in the up movement. And now the market has reached these levels here, roughly around $38 per barrel. So it is a typical setback, and the market has the best chance to turn around. This is a really bad news because some people are, of course, suffering of high energy prices, and when the prices are going up again, this is not the best indication. However, this support level is not a must that the market needs to turn around right now, but it is a best chance that the market will do soon. So now let's have a closer look on lower time frame. Is there any hint already what the market is doing here? So I'm constantly switching between the time frames. Many people are saying, no, I'm only trading this time frame or that time frame. But I get a bunch of information in combination of all these pictures. The big picture, which is indicating, well, we have seen enough. There's a fair chance that the market will turn around. Having a chance is not a proof that the market will turn, but is giving us an idea. Let's have a closer look at the very end of this portion here. So we will do this not only in the daily chart, we will go a little bit intraday, and you can see here in a 4-hourly chart and a little bit more detailed in a 15-minute chart how this movement looks like. And if you're not sure what to do, we are just having a closer look at parts of the movement. First of all, we say this is a upwards movement currently. This is easy to decide. You can just take the lowest point here and the current the highest point here in this market, and you can see this is one movement. And now we have a closer look at this movement. You can see we had a first part, we had some breather here in the middle, and we had a next part here. If it sticks with this part, it would be a three-wave pattern. I can just draw it beside this. We had an up move, coming down, and another up move, which is a three-wave pattern so far, and giving us a chance, as three-wave patterns are typically corrective patterns, that the market is continuing into the trend direction, which means, as this one is an upwards movement, that the market will continue to the downside. Yeah, well, but who's telling me that this is staying a three-wave pattern? We are coming down now, but it can continue to the upside, and then it's one of the famous upwards movements. Five-wave to the upside is indicating that we have a new trend. Absolutely correct. However, if you have a closer look, taking away the blue drawings, we see this level here, and we see that the previous highs here, they are overlapping. If you take this one and saying, okay, this is the first part of the movement here, five-wave to the upside, the end of the upwards movement, or even this one here, you can see this is the same idea. I can make it a little bit bigger for you so that you can clearly see this. So you can see that we were overlapping the previous part of the up movement, and that's not the best indication for a strong movement. Typically, it is looking like a corrective pattern, because overlapping patterns are more or less corrective patterns, not giving us a strong idea that the market will do something really, really convincing into one direction. So in this case, we have an up move, but we have either a three-wave pattern, which is corrective, leading us to lower prices, or we have something leading us to higher grounds, however with overlapping, which is also a weak situation. So I'm not really convinced currently that buying is the best opportunity. It looks a little bit like we've seen here this before. For example, you have this quite strong movement, and we have something like an up movement here, but you can see this is a corrective pattern because we have this overlapping situation here as well. And subsequently, the market came down. Another three-wave pattern to the upside, and the market came down. Another part you can think about this one, either this is an ABC three-wave pattern, which is not a best sign to buy, or it is something else, but then it's overlapping, which is also not a good indication to buy this market. So you can clearly see we have a lot of signs that what we've seen here many times before is the case here as well. So I'm not super convinced to buy this market currently. Because this overlapping situation, I would not wonder if the market is going and see lower lows than these before in mid of August. So I would expect that the market is going down once more. Not necessarily only to this area, but I see that we have a good chance that currently buying is not the best option. Yeah, well, I want to have a second opinion. Yes, I can clearly understand this. The second opinion is, in case it is a five-wave pattern with overlapping, there is still a chance. And for this chance, we have something like a statistic. These patterns are called leading diagonals, and they are shaped roughly like this. They have strong movements. Yeah, well, not so much. They are not very strong because they have overlapping corrective patterns. Sometimes you cannot see it. Maybe you can see it here a little bit. They are touching or even overlapping here. This is one typical idea for the leading diagonals. And we can think, when do we find leading diagonals? Leading diagonals in a trend movement are coming up only at the beginning. That's the reason why they are called leading diagonals. They're coming up in the first wave, not In later waves, only in the first wave, at the very beginning. But in the commodity market, and energy futures, for example, or the energy market is a commodity market, the probability for leading diagonals is not super high. It's, let's say, 10% if you're really positive with the market. So the chance that this is a leading is not zero. It is possible that this is a leading situation, which would indicate that the market will subsequently continue to the upside. However, the chance for this seems to be less than 10%. So in this case, I would not say, yeah, it's absolutely clear. I need to buy now because the chances are very high that we will see stronger price movements. Yeah, there's a chance that this drawing will occur. The chance is still there, but the chance is really limited. So in my eyes, I don't want to convince you to do this or that, but in my eyes, it's not the best choice to buy into the crude oil market currently. I would wait for two things. The first thing which may happen is it is really a corrective thing and the market will come down once more. Before maybe then, because even in this case, even around 83, for example, we are still in the area for a turning point. We are still in the trend channel. We have still good opportunity to turn then, giving us a strong movement, which may look like this, followed by a weak movement, a corrective pattern. This case would give me a good idea to buy the market, but maybe later on after the market is coming down. But there's another option you can follow. If the market is really doing something like this, we call it leading. Chances for that? 10%, roughly. If the market is doing something like this, and that's really crucial, this is really, really important, and then is giving us an even weaker corrective pattern here. I have to compare the up movement with the down movement, and I really want to see, because this is really weak, I really want to see that this is even way weaker. In this case, I might dare, depending on the pattern here, if this is really looking corrective and even worse than this one, then I might think about buying this market anyway in the hope that this is continuing. So this is the second option, but I really want to see here something even weaker than this one, because this is not really convincing. I need to see that this is even worse to make me feeling as a buyer, to make me wanting to buy this market here. So putting two things together, we are still, and currently we are at a very good point that the market is turning. The market has the best chances to do so. Currently, I don't see that the market is willing to, or the market participants are willing to buy. So this is something I would not buy now. I want to see a little bit more clues, more hints that the market participants are really wanting to do so. Currently, I'm not super satisfied with what I see here. You can see here, for example, in the 15-minute chart, that what we've thought of before, counter movement. This is a small one, counter movement. This is a small one. This is also a small one, counter movement. It is too much overlapping in this chart. And overlapping is always a bad sign. This is always indicating, no, this is not the right direction. However, the good news is we have this on both sides. The good news is for us as traders. We are overlapping to the upside, same as here. But in the bigger picture, also this part is overlapping. So this seems to be corrective as well. Or the last pattern. And in this case, this is all indicating that subsequently the market will turn around. But I think currently it's not the right point to do so. Let's switch to another very important energy market, and this is the natural gas price. In this case, we are referring to the Henry Hub natural gas, a contract traded at the NYMEX. And you can see that the market is really leading us upwards. We have a longer period of rising prices since 2020 and strong movements, partly at least. But I think really important is what we see not only on the daily chart. I think it's better on the 4-hourly chart. Even if you don't want to trade the lower time frames, if you maybe want to cover your situation, maybe your energy prices you have to pay for, you may cover this. Or if you see yourself more like a trader, you want to come into the market at low prices to get higher prices subsequently. I think natural gas is really interesting currently on the 4-hourly chart. Let's have a closer look at that part currently. What we've seen here is, or what we see here now, is a strong movement to the upside. I think this is quite a good one. To be honest, it's not perfect because also here we have something like an overlapping situation. So there's still a chance that the market is, even in this part which looks quite good, in something like a corrective pattern. I would not wonder if this is happening currently. However, no matter what, can we buy now anyway, or shouldn't we do that? Currently, you can see this from the drawing, I would expect that the market is turning around a little bit and going lower for further lows, at least into this blue box, which is not so far away. We can draw it a little bit lower anyway, because we need to go below this one to have something like a typical ABC pattern. And if you measure the first part, which is roughly this size, and taking this from this high point here, you get the yellow line. This is a typical one-on-one projection, which is leading us, if this is a typical movement, price movement, which is leading us roughly into the area of 8.7. So this would be something I really would await currently, that the market is going to these levels down first before doing something different. However, if you see this part completely and see, yeah, we may be in something like a corrective pattern now, which is called a sideways correction. We are also going down first. So no matter whether you see yourself in a bull market or a bear market here, you can see that first the market needs to come down to give us the big corrective pattern, which is a typical sideways correction. And if you are confused currently, in a sideways correction, very often this part is even higher than this one. You can see this in a flat correction, for example. Flat correction, you can see you can't see this one, but you had a strong movement to the upside, and then something 3-wave or corrective pattern to the downside, corrective pattern to the upside, and a fast move to the downside at the very end. And this one is even higher than this one. This kind of corrective pattern is called a flat, and you can see in a trend market, and I think we can say that the trend is moving upwards in natural gas, we can see that flats are really common. Nearly half of all corrective patterns are looking like this. So we can expect, this might be the case in this case as well. And if you're just wondering about, it's not really half, it's a little bit less, you're absolutely right. However, D3, which is called a double sideways, is nearly the same. Only the last wave internal structure is a little bit different. So you are allowed, in my eyes, to combine these numbers to see how often you get this kind of corrective pattern. So it is absolutely a good idea, in my eyes, to expect that this may happen and is leading us to lower prices before going upwards, especially as this up movement is always coming with an overlapping pattern. So you see, the chances for natural gas currently for going lower, funnily the same as the crude oil prices, are quite high. There's not a one-on-one correlation between these both markets, but sometimes they are going into the same direction, and it seems that the market participants currently are feeling the same vibe of the market, let's say like this, or having the same idea about the news you get about this. And these news are leading us to lower grounds. You can see this even on a lower time frame, 50-minute charts for the intraday traders of you, maybe. First one, strong to the downside. We have something really shaky to the upside. And you can see we were moving into the mid area here. And typically when this corrective pattern is over, and one part to see this is, when we are breaking through these lows here, then we can expect some continuation to the downside, which is leading us to this drawing roughly around 8.7. It is not a must that we exactly reach this level, but I see a good chance that we reach this level first, with additional chances for even lower prices. Keep in mind the possible sidewave correction, and the typical end is somewhere around here, a little bit below. It's just an educated guess what I'm doing here. It's not exactly at that price level the market will turn. We will see this in a later video, maybe when we see more information about the down movement. We can have some projections from the internal structure, maybe to measure where the market is turning. But the first minimum target in my eyes, when the market is breaking through this level here, it's roughly 9.20, which is the low from August 25. We can see when the market is breaking through this level that the market has a very good chance to reach 8.7 or 8.70, whatever. And from that point, we need to decide whether the market is turning around or continuing. So the next really important level is to have a closer look when the market is reaching here, whether the market is only coming up in a really weak way. Then I would clearly think that the market will continue, or that the market is bouncing strongly and coming down in a shaky way. So you may take profits here. You may think about having closing half of the position to take profit for half of it and keep this chance for lower prices running. Maybe we have some more information when we see this part here, this last part here. If we see some kind of internal structure here, for example, if this is a really coming down weak, then I definitely want to take profit here, because I would not expect that the market has the strength to continue here to lower prices. However, if the market is doing something like this here, I would think that this is not all. I would think, okay, this is another 5-wave pattern, and maybe the market is continuing strongly. But this is giving us in the future, however, a first nice trading idea in my eyes, or possibility for you to hedge your positions if you are long, or if you want to do something in the market. For lower prices, is this a good entry point in my eyes, expecting at least something around there, with a good chance that the market even will come down even lower. However, after reaching this level, this is just an idea, first move to the upside, ABC sideways correction here, we have a really good chance that subsequently the market will turn around and leading us even way higher, what we've seen here before. But this is something for the future. We don't know this now. This should be decided here at that point. So what I think is really important, if you want to trade the market, always trade from part to part to part. And when you reach these levels, namely, for example, the 8.70, if you reach these levels, then you have to decide, shall I stick in the market, keep the position, or take profits and doing something newly as soon as I have new signals. I want to provide you with new ideas, new signals maybe in the future as well. So I strongly recommend to subscribe this channel. Hit the bell if you want to be informed and don't miss the opportunity to have an early access on this one. Of course, please keep a like if you like it, and have a wonderful and good trading time. See you soon.